Hey there everyone, Iggy the Investing Iguana here. Are you ready to dive into the latest moves by some of Singapore's biggest corporate players? In this video, we're going to take a closer look at Capitaland Investment, ST Engineering, and SATS. These companies are making some serious waves in the world of data centers, aviation, and airport services. But why should you care? Well, if you're an investor looking for companies with strong growth potential, you won't want to miss this. We'll break down exactly what these moves mean and how they could impact the future of these industries. Plus, I'll share some insights on how you can spot similar opportunities in the market. Capitaland Investment, CLI, recently released an insightful research paper titled Asia-Pacific Data Center Investment Strategies in the Age of Digitalization as part of their Perspectives series. This paper couldn't have come at a better time, as data centers are becoming increasingly crucial in today's digital economy. From cloud computing to artificial intelligence, data centers play a vital role in storing and processing the massive amounts of data generated every second. The research paper highlights the rapid growth of data centers in the Asia-Pacific region, driven by factors such as the rising adoption of digital services, strong government support, and robust long-term economic prospects. CLI's Managing Director of Private Funds, Data Center, Michelle Lee, emphasizes that digitalization is a global megatrend fueling the growth of data centers. In fact, a staggering 97% of institutional investors plan to increase their capital allocation in the data center sector, with a particular focus on the Asia-Pacific region. CLI has been at the forefront of this growth, adding 22 data centers to their portfolio since 2021. They now manage 27 data centers with a combined value of approximately $4.5 billion and a gross power capacity of over 800 megawatts across 8 countries. The research paper also sheds light on the key markets for data center investment in the Asia-Pacific region, including Singapore, Tokyo, Osaka, Seoul, Sydney, Mumbai, Bengaluru, and Chennai. Interestingly, the paper reveals that while cloud computing has been the primary driver of data center demand, the rise of artificial intelligence is now fueling even more explosive growth. As businesses and consumers increasingly rely on digital services, the demand for data storage and processing is skyrocketing. This presents a tremendous opportunity for investors looking to diversify their portfolios and tap into the growth potential of the data center sector. However, investing in data centers is not without its challenges. The research paper highlights the importance of considering factors such as power availability, sustainability, geopolitical risks, and regulatory complexities when making investment decisions. This is where partnering with experienced players like CLI, who have deep market knowledge and a strong network in the Asia-Pacific region, can make all the difference. As more and more of our lives move online, the demand for data centers is only going to keep growing. And institutional investors are taking notice. 97% plan to increase their data center investments in Asia-Pacific. So keep an eye on companies like CLI that are well-positioned in this space. ST Engineering, a leading aerospace company, recently signed a significant 2-year agreement with Safran Aircraft Engines to provide crucial maintenance, repair and overhaul, MRO, services for LEAP aircraft engines. While the technical details of aircraft engines may not be the most exciting topic for the average person, these powerful machines are absolutely essential to keeping planes flying safely and efficiently. The LEAP engine family, which powers popular narrow-body jets like the Airbus A320neo and Boeing 737 MAX, has experienced the fastest production ramp-up in commercial aviation history. As air travel demand bounces back strongly after the COVID-19 pandemic, with passenger traffic expected to exceed 2019 levels this year, the need for reliable MRO support to keep the growing fleet of LEAP engines in top condition is more important than ever. Under this new agreement, ST Engineering will perform specialized work on key LEAP engine components, including repairs on the high-pressure turbine rotor and nozzle assemblies. This partnership allows Safran to expand their MRO capacity and ensure faster turnaround times for engine overhauls, which is critical for airlines as they strive to maximize aircraft utilization during the busy post-pandemic recovery period. With their extensive expertise, state-of-the-art facilities, and now this deepened support for the ubiquitous LEAP, ST Engineering is well-positioned to play a key role in supporting the resurgent aviation industry in the years ahead. As global air traffic soars to new heights, ST Engineering's MRO services will help keep passengers flying safely while minimizing costly downtime for airlines. It's a win-win partnership that showcases the critical behind-the-scenes work that keeps our world connected through the miracle of flight. SATS, the leading provider of gateway services and food solutions in Asia, is making big moves to accelerate its growth both at home in Singapore and across the Asia-Pacific region. The company recently announced a major restructuring of its gateway services business, which will now be split into two distinct units, the Singapore Hub and Gateway Services Asia-Pacific. This strategic decision allows SATS to further strengthen its commitment to Singapore's aviation sector, while simultaneously scaling up its presence in other key markets to capture new growth opportunities. The Singapore Hub will be laser-focused on ensuring the continued success and competitiveness of Changi Airport and Seletar Airport, drawing upon SATS' global capabilities and expertise to deliver world-class service, performance, and customer experience. Meanwhile, the Gateway Services Asia-Pacific unit will be tasked with growing SATS' market share across the region, overseeing operations and its network of overseas stations to provide a seamless, high-quality service to airline and airport customers. As a company, SATS has a long and proud history that dates back to the early days of aviation in Singapore. From its origins as a ground handling provider, SATS has evolved into a comprehensive solutions provider, offering a full suite of services spanning everything from passenger and baggage handling to in-flight catering, security, cargo, and cruise handling. With a presence at over 60 locations in 14 countries across Asia-Pacific and the Middle East, SATS has established itself as a true leader in the industry. The decision to restructure its gateway services business is a clear signal of SATS' ambition to accelerate its growth and expand its global footprint. By creating dedicated units for its Singapore and Asia-Pacific operations, SATS will be better positioned to innovate, adapt, and respond to the unique needs and opportunities of each market. At the same time, the company remains deeply committed to its home base of Singapore and to supporting the continued growth and success of Changi Airport as one of the world's leading aviation hubs. With its unrivaled expertise, comprehensive capabilities, and customer-centric approach, SATS is well placed to thrive in the years ahead. As the aviation industry continues to evolve and new challenges and opportunities emerge, SATS will be at the forefront, driving innovation and delivering the highest levels of service and value to its customers across Asia-Pacific and beyond. Alright folks, that was a lot to digest, but I hope you now have a better understanding of why Capitaland Investment, ST Engineering, and SATS are worth keeping an eye on. These companies are positioning themselves to take advantage of some major economic trends: the rise of data centers, the recovery of the aviation industry, and the growth of the Asia-Pacific region. As an investor, it's always smart to look for companies that are making strategic moves to stay ahead of the curve. CLI, ST Engineering, and SATS are great examples of this. They're not just sitting back and waiting for things to happen, they're actively shaping their own destinies. Of course, investing always comes with risks, and it's important to do your own research before making any big decisions. But if you're looking for some solid companies to add to your watch list, these three are definitely worth considering. If you found this video helpful, do me a favor and smash that like button. And if you want to stay up to date on all the latest investing news and insights, be sure to subscribe to the Investing Iguana channel. I put out new videos every week, breaking down complex financial topics into easy-to-understand chunks. Thanks for watching, and until next time, stay invested, my friends.